Let me show you something that's going to make you question everything you thought you knew about trading. I'm looking at two traders right now. Trader A has a 92% win rate. Trader B has a 38% win rate. Which one is profitable? If you said Trader A, you're wrong. And that wrong answer is probably why you're still losing money. Trader A is down $47,000 this year. Trader B is up $231,000. Same markets, same time period. One is filing for bankruptcy, the other is buying a Tesla. How is this possible? Because win rate is a lie. It's the biggest, most destructive myth in trading, and it's robbing you blind while you chase a number that means absolutely nothing. Stay with me, because I'm about to destroy everything the YouTube gurus told you, and show you why the traders making real money have win rates that would embarrass most beginners. I need to tell you about Michael. Michael sent me a screenshot 3 months ago. He was so proud. 87% win rate over 6 months. 348 wins, 52 losses. He asked me if he should quit his job and trade full-time. I asked him one question. How much money did you make? Radio silence. 2 days later he messaged me back. I'm actually down $9,000. I don't understand. I'm winning almost 90% of my trades. You know what I told him? That's exactly why you're losing. His brain broke. How can winning 90% of your trades make you lose money? Because Michael was so obsessed with being right that he forgot the only thing that actually matters, making money. Let me break down what Michael was doing, and I guarantee you're doing some version of this too. He'd enter a trade. It would go against him. Instead of taking the loss, he'd hold it, add to it, average down, pray to whatever deity would listen, anything to avoid admitting he was wrong. Eventually, the trade would bounce a tiny bit. He'd close it for a $5 profit, win rate preserved, ego intact, account slowly dying. But those trades that kept going against him, the ones that never bounced, he'd hold those until they were down $50, $100, $300. Then finally, in complete despair, he'd close them. So his math looked like this. 348 wins at an average of $6 each. That's $2,088. 52 losses at an average of $214 each. That's $11,128. He made $2,000 from his wins. He lost $11,000 from his losses. Net result, down $9,000. With an 87% win rate. This is what I call winning yourself into bankruptcy. And it's epidemic. Here's the uncomfortable truth that nobody wants to tell you. Win rate is the most meaningless metric in trading. It tells you nothing about profitability, nothing about risk management, nothing about whether you're actually a good trader. You know what it does tell you? How good you are at lying to yourself. A high win rate just means you're really good at one of two things. Either you're cutting your winners way too early and letting your losers run, or you're trading with terrible risk to reward ratios that guarantee eventual destruction. Let me show you the math that will change your life. It's called expectancy, and it's the only number that matters. Expectancy equals your win rate times your average win, minus your loss rate times your average loss. That's it. That's the whole game. Trader A, 92% win rate. Average win $20, average loss $800, expectancy 0.92 times 20 minus 0.08 times 800. That's 18.4 minus 64, negative $45.6 per trade. This trader loses an average of $45 every time they trade, but they win 92% of the time. So they feel like a genius right up until they're broke. Trader B, 38% win rate. Average win $300. Average loss $100. Expectancy 0.38 times 300 minus 0.62 times 100. That's 114 minus 62. Positive $52 per trade. This trader makes an average of $52 every time they trade, but they lose 62% of the time. So they feel like a failure right up until they're rich. Which would you rather be? The person who feels good or the person who makes money? Because you don't get both. I learned this lesson the hardest way possible. 5 years ago, I had an 81% win rate. I thought I'd figured out trading. I was posting my stats in forums. People were asking me for advice. I felt like a god. Then I looked at my account. I was down $32,000. 32,000 with an 81% win rate. I had a complete mental breakdown. I couldn't understand it. I was winning 4 out of every 5 trades. How was I losing money? Then I looked at my average win versus my average loss. Average win, $12. Average loss, $207. I was risking $200 to make 12. I needed to win 94% of my trades just to break even. I was winning 81%. I was literally guaranteeing my own failure while patting myself on the back for being right. That's when I understood. The market doesn't care if you're right. It cares if you're profitable. And those are two completely different things. Here's what blows my mind. If I offered you 2 buttons right now, and I told you button A has a 90% chance of giving you $10, and button B has a 30% chance of giving you $100, which would you push? Most people say button A, it feels safer. You're probably going to win, but let's do the math. Button A, 90% times $10 equals $9 expected value. Button B, 30% times $100 equals $30 expected value. Button B is more than 3 times better, but it feels worse because you're going to lose 70% of the time. Your ego can't handle that. So you choose the worse option because it makes you feel better. This is why most traders are broke. They're optimizing for feelings instead of results. Let me show you what happened when I fixed my trading. I stopped caring about win rate completely. I stopped trying to be right. I started focusing on one thing, making more when I'm right than I lose when I'm wrong. My new rule: every trade has to risk $1 to make at least $2, period. No exceptions. If I can't structure a trade with at least a 1-to-2 risk-reward ratio, I don't take it. You know what happened to my win rate? It dropped to 43%. I was losing more trades than I was winning. My ego was destroyed. I felt like I'd gotten worse at trading. But my account, it grew and grew and grew. In the first year with my new system, I made $89,000, more than I'd made in the previous 4 years combined. How math? Beautiful, simple, unavoidable math. 43% win rate. Average win $200. Average loss $100. Expectancy 0.43 times 200 minus 0.57 times 100. That's 86 minus 57. Positive $29 per trade. I made an average of $29 every time I traded. It didn't matter that I lost more often than I won. Over 100 trades, that's $2,900 profit. Over 1,000 trades, it's $29,000 profit. And here's the beautiful part: it's consistent, because I'm not relying on being right. I'm relying on math. When you trade for high win rates, you need everything to go perfectly. You need the market to cooperate. You need luck. You need to be superhuman. When you trade for positive expectancy, you just need math to work. And math always works. Now let me tell you why the trading industry pushes the win rate myth so hard. Because it sells. Nobody wants to buy a course that says you're going to lose 60% of your trades, but you'll make money. That doesn't feel good. That doesn't sound impressive. But join my program and achieve an 85% win rate. That sells courses. That gets clicks. That makes people feel like success is possible. The gurus know this. They post screenshots of their win rates. They never show you their actual profit and loss statements. They never show you their average win versus average loss. They show you the metric that means nothing and hide the ones that mean everything. It's a magic trick. Look at this shiny win rate over here, while I hide the fact that I'm risking 1,000 to make 100 over there. I was coaching a trader named Lisa last year. She came to me devastated. She'd paid $4,000 for a course that promised an 80% win rate strategy. She followed it perfectly for 6 months. She achieved a 79% win rate. She was down $17,000. The course never mentioned that the strategy used a 1-to-10 risk-reward ratio. You were risking $100 to make $10 per trade. With a 79% win rate, you still lose money. But the sales page said 80% win rate in giant letters. It didn't say terrible expectancy anywhere, because that doesn't sell. Lisa sued, she lost. The course never promised profitability. It promised a high win rate, and it delivered. It just bankrupted her in the process. This is legal, this is common, this is the industry. Here's what nobody tells you. Professional traders, the ones managing millions and billions of dollars, have win rates between 30 and 50%. The best trend followers in the world win maybe 35% of their trades, and they're millionaires, because they understand that win rate doesn't matter. The turtle traders, one of the most famous trading experiments in history, had an average win rate around 40%. They turned $10,000 into millions. How? They cut their losses at 1% and let their winners run to 10, 20, 50% gains. They lost 6 out of every 10 trades and became legends, because they understood the only thing that matters: expectancy. Let me give you a thought experiment. Imagine you're trading with a crystal ball. You know exactly which trades will win and which will lose before you take them, but you still have to follow your system. Trader A's system, 90% winners. Risk 100 to make 10. 10 trades. 9 wins times 10 equals $90. 1 loss times 100 equals negative $100. Net, negative $10. Even with perfect knowledge, this system loses money. That's how bad the math is. Trader B's system, 30% winners. Risk 100 to make 300. 10 trades. 3 wins times 300 equals $900. 7 losses times 100 equals negative $700. Net, positive $200. Even knowing you'll lose 7 out of 10 trades, you still make money. That's how powerful good math is. So why do traders chase high win rates? Because we're human, we're emotional. We're wired to avoid losses more than we seek gains. It's called loss aversion, and it's destroying your account. Your brain hates being wrong. It's literally painful. Brain scans show that losing a trade activates the same neural pathways as physical pain. So your brain does everything it can to avoid that pain. It convinces you to hold losers. It might come back. It convinces you to cut winners. Lock in the profit before it disappears. It optimizes for win rate instead of profit because winning feels better than making money. This is why trading psychology is 90% of the game. You can have the best strategy in the world, but if your ego needs to be right, you'll sabotage yourself every single time. I watch this happen constantly. I'll show someone a strategy with 45% win rate and 2-to-1 risk reward. The math clearly shows it's profitable. They'll say, "But I'm losing more than half my trades. That feels bad." Then they'll take a strategy with 70% win rate and 1-to-3 risk reward. The math clearly shows it's a slow death. They'll say, "This feels better. I'm winning most of my trades." 6 months later, the first person is up. The second person is broke. Feelings don't pay bills. Here's a harsh truth. If you care more about your win rate than your expectancy, you're not a trader. You're an ego with a brokerage account. And the market is going to humble you until you learn this lesson. Let me tell you about the biggest mistake I see. Traders will be in a winning trade. It's up 1-to-1. They're risking 100 to make 200 and they're up 100. They're at break-even risk. Their brain says, "Take it. You can't lose now," so they close it. They just turned a 2-to-1 risk-reward trade into a 1-to-1 trade. They cut their expectancy in half because they couldn't handle the stress. Then they'll be in a losing trade. It's down their full stop loss. They should close it. Instead, their brain says it might come back. You can't take this loss, so they hold it. It goes down more. They just turned a 1-to-1 loss into a 3-to-1 loss. Same trader, same day. They cut their winners and let their losers run. They literally did the exact opposite of what they should do. Why? Because they're optimizing for win rate instead of profit. This is why I tell every new trader, your first goal isn't to make money. It's to let your winners run and cut your losers quickly. If you can do that, even with a terrible strategy, you'll eventually be profitable. If you can't do that, even with a great strategy, you'll eventually be broke. Here's a framework that changed my life. Stop counting wins and losses. Start counting dollars. At the end of every day, I don't ask, how many trades did I win? I ask, how much money did I make? Those are completely different questions with completely different answers. I've had days where I won 5 trades and lost 2 and still lost money overall. I've had days where I lost 4 trades and won 1 and made a ton of money. The number of wins is irrelevant. The only thing that matters is the bottom line. Once you start thinking this way, everything changes. You stop caring about being right. You stop holding losers to preserve your win rate. You stop taking profits early to avoid losing. You just follow your system, take the trade, set your stop, set your target, let it play out. Whatever happens, happens. You're not trying to be right, you're trying to make money. This is what professionals do. They think in probabilities and expectancies. They don't care about individual trades. They care about long-term results. I had a trade last month that everyone thought was stupid. It was a low probability setup, maybe 30% chance of working, but the risk to reward was 1 to 5. I was risking 200 to make 1,000. People messaged me saying, why would you take a trade you're probably going to lose? Because the math works. If I take 10 of these trades, I expect to win 3 and lose 7. 3 wins at 1,000 equals 3,000. 7 losses at 200 equals 1,400. Net profit, 1,600. I don't need to be right 70% of the time. I just need to be right 30% of the time with 5 to 1 risk reward, and I'll crush it. That trade hit, made 1,000, but even if it lost, I'd still take the same trade tomorrow. Because I'm not trading outcomes, I'm trading probabilities. This is the mindset shift that separates profitable traders from broke traders. Broke traders judge themselves on individual trades. I was right, or I was wrong. Profitable traders judge themselves on process. Did I follow my rules? Did I execute properly? Here's your homework. Go through your last 50 trades. Calculate your real expectancy. Your win rate times your average win minus your loss rate times your average loss. If that number is negative, your system is broken. It doesn't matter if you're winning 95% of your trades. You're losing money and you need to fix it immediately. If that number is positive, congratulations. You have an edge. Now your only job is to execute it consistently and let the math do the work. Your win rate is irrelevant. I'm going to give you a truth bomb that might hurt. Most of you reading this have a negative expectancy. You're on a sinking ship, and you're bailing water with a teaspoon while congratulating yourself on how hard you're working. Your high win rate isn't saving you. It's killing you. Every time you cut a winner early, you're destroying your expectancy. Every time you hold a loser hoping it comes back, you're destroying your expectancy. Every time you take a trade with poor risk to reward because it looks good, you're destroying your expectancy. And all the discipline, all the screen time, all the chart analysis in the world won't save you if your expectancy is negative. You're just losing money more efficiently. The solution is simple but painful. Stop trying to be right. Start trying to make money. That means taking losses quickly without hesitation. That means letting winners run even when you're scared. That means trading setups with great risk to reward even if they don't win as often. That means ignoring your win rate completely and focusing on your bottom line. Will this feel good? No, you'll feel like you're losing all the time. Your ego will hate it. You'll question yourself constantly, but your account will grow. And that's the only thing that actually matters. I'm going to end with this. The market doesn't pay you for being right. It pays you for managing risk properly. You can be right about market direction and still lose money if you manage your risk poorly. You can be wrong about market direction and still make money if you manage your risk properly. Win rate is a feel-good metric that makes you feel like a trader while slowly bankrupting you. Expectancy is the real metric that actually determines if you make money or not. You can optimize for feelings or you can optimize for profit. You cannot do both. Choose wisely. Because in 5 years, you'll either be one of the traders posting screenshots of your high win rate while secretly being broke, or you'll be one of the quiet traders with average win rates and extraordinary bank accounts. The truth hurts, but it's the only thing that will set you free. Your win rate is a lie. Your expectancy is the truth. Stop chasing the lie.